Now, here's an example with the most interesting program, the 75% Canada Employment Wage Subsidy. So its impact on SR&ED tax credits. Let's assume we have an employee paid $2,000 per week, round number. So that's $104,000 per year. So in that case, that employee, for that employee, the employer would receive $847 per week. This is the maximum, which has been determined by the government. So that means that most of the salary still is paid by the employer to the employee. And that salary is fully eligible to SR&ED. So only the part, the $847, is the part that is being carved out because of the subsidy. This is going to be removed and carved out from your SR&ED claim. So let's assume in this scenario that 60% of the time of the employee is devoted in SR&ED. So there's $62,000 for which we would calculate 64% tax credits. Let's assume that the company is applying for the full 24 weeks of the subsidy. What we would have now without the program is $10,000 of tax credits paid by BC and $30,000 paid by the federal. Now, if we add to the mix the employee wage subsidy, then you reduce by roughly $1,000 the credits from BC and $4,000 the credits for the federal. So what you see is the net impact. So instead of 64% tax credit rate apply on $62,000 of eligible salary, you have a rate of 56%. So basically, the impact is much less than you might think. You know, carving out 75% of salaries might lead you to believe that 3/4 of the tax credit would be lost, but it's not the case. And one of the reasons here is that most of the salary of our guy or girl is not affected by the subsidy for most of the year. So the main takeaway here is it is worth to claim SR&ED. It's always worth, but even now it's worth to claim SR&ED. So there's still another $20,000, the wage subsidy itself, that adds up to the tax credit. So